I'm going to expose the #1 ICT model out right now that you can use to find consistency inside of the marketplace. This is also the same model that JCapFX, a well-known ICT trader, has used to obtain over $1 million in prop firm payouts. As well as at the end of the video, I'm going to break down the exact trade that I took with my private mentorship students that netted me a little over 4 to 1 R, selling at the exact high of day. But before we get into the strategy itself, make sure you guys are following me on Instagram at Arkhamtrades. Thank you. The model that we're going to be going over is the New York Power of 3. If you guys are unaware, the Power of 3 is a 3-step framework. First, we have the accumulation phase, followed by the manipulation phase, and then we have the distribution phase. As we can see in these two depictions, we have that accumulation, followed by that drop to the downside, which is that manipulation, and then we have this reversal higher, which is that distribution. And on the opposing side, we have that accumulation, followed by the push to the upside, which is that manipulation, followed by that reversal lower, is the distribution phase. But how do we use this framework? Well, that gets us into our first lesson, which is time. The Asia session between market open and 12 a.m. EST is when we can anticipate some measure of accumulation to take place, followed by London session between the time frame of 2 a.m. to 5 a.m. Eastern Standard Time is when we can anticipate the manipulation phase to take place. And now during New York session between 7 to 11 a.m. Eastern Standard Time is when we should anticipate a low or high to be formed inside of the marketplace at or before New York session open, to then be formed following that distribution to then take place. So as we can see here in these two depictions, we have that Asia accumulation, followed by this drop lower during the London session to a lower level, establishing that low, followed by the distribution higher coming into the New York session. This is the exact same framework that we have here for the Power of 3. And down here we can see we have that Asia accumulation, followed by that push to the upside during the London session. We have that push higher during the New York, followed by that distribution lower. This is the Power of 3 in a bearish and bullish scenario. The Power of 3 is a reversal framework, and when we are anticipating a reversal to take place inside of the marketplace, it has to take place inside of a higher time frame key level, followed by a lower time frame shift. So the two key steps we want to anticipate are a tap into a higher time frame level, like a fair value gap, order block, or liquidity sweep. Following that tap into a higher time frame level, we want to go down into the lower time frames and anticipate a market structure shift from that area, following a retracement on the lower time frames into a lower time frame level, like a fair value gap, order block during the New York session for that reversal signature. So as we can see here in this depiction, we have that Asia session accumulation, followed by that manipulation lower during the London session into a higher time frame key level. This key level could be a 4-hour, 1-hour, daily, some type of higher time frame fair value gap, order block, or liquidity pool that it taps into. After it taps into that level, we want to then anticipate a breaker structure to the upside, which it does give that breaker structure to the upside, just like so. And then on the lower time frames, we want to anticipate a retracement into a fair value gap or order block, which it gives so right here. So following that breaker structure to the upside, we get that retracement into a lower time frame fair value gap or order block for that Power of 3 continuation higher. And as we can see here in this bearish example, we had that manipulation during London session. We had this liquidity sweep of the London session highs, followed by this breaker structure to the downside right here, this breaker structure lower, giving that lower time frame retracement for that continuation lower for that Power of 3. Last but not least, after we've established our trade, we want to be targeting opposing liquidity or inefficiencies inside of the marketplace, aiming for a 3-to-1 R on our trade idea. Since we're getting in near the low or high, through experience, I've realized this model can create some absolute massive trades through the New York session, and we want to be maximizing profits on our winners because this is a A+ setup. So as you can see here, after we had the liquidity sweep followed by that breaker structure lower, and we got that retracement and we took our trade here, we want to be targeting back below these Asia lows. Or in this bullish example, after we had this breaker structure higher, after tapping into that higher time frame key level and given that retracement, we want to be aiming back up into this higher time frame bearish order block. Offers us at least a 3-to-1 R and sometimes 4-to-1 R. Now let's get into some live market examples as well as trade breakdown that we took on US 30 with my live trading students inside of my private mentorship that netted us a little over 4-to-1 R. I'm into marketplace here on GBP/USD, April 17th, 2024. We can clearly see that we're inside of a New York power of 3. We have the Asia session between the opening to 12 a.m. where we had this accumulation phase. Following that accumulation phase, we had this retracement here for that manipulation during the London session into this 1 hour bullish order block. This bullish order block on the 1 hour is our key level. Coming into the New York session, we want to go down to a lower time frame and anticipate a break of structure on that lower time frame to then capitalize on this New York power of 3, aiming back above the high of week. Let's go down to the 15-minute time frame and see what happens. So we're down to the 15-minute time frame. 7 o'clock is just about to open up, which is the New York session open. I want to establish this high, and if we can break above this high, leaving this 1 hour order block, that'll then give me confirmation that we have found support at this level. And if I can get some type of retracement as we leave that level, I want to then take longs first back above these Asia highs and eventually back above my liquidity pool. Let's see how we trade here at 7 a.m. and see if we can get our power of 3. We can clearly see that we break above that high with strong displacement. Let's see if we can get some type of signature like a fair value gap or order block to then take our trade idea. We then create this 15-minute bullish fair value gap. Let's see if we can retrace down into this bullish fair value gap for that continuation to the upside. I'm going to put my limit order here at the opening of this bullish fair value gap. Stop loss just below that fair value gap low, targeting back above the high of week for a 4-to-1 R. Let's see how this trade then plays out. Price taps into our fair value gap. Let's see if price wants to leave it now. Price then reaches higher and higher all the way up into our objective for that 4-to-1 R. Like I mentioned before, through my experience, I've noticed that this model is very, very good when it comes to catching big moves inside of the marketplace. So you guys want to be aiming for at least a 3-to-1 R. Let's get into our next trade idea. Coming into the marketplace here, we're looking at the Dow Jones, and this is a trade that we actually took live with our live trading students, and let's break it down. So we have this 4-hour bullish fair value gap here that we're anticipating the marketplace to reach down into as we came into the Dow Jones New York Open. So let's go down to lower time frames and see what happens there. Now we're down on the 15-minute time frame, and we want to see the marketplace reach down into this bullish fair value gap level. And if we can reach down into that level, we want to then anticipate higher prices inside of the marketplace to eventually reach back up above these highs. Let's see what happens. As we can see here, we tapped into this higher time frame key level, which was that bullish fair value gap. After tapping into a higher time frame key level, we then saw this push to the upside, leaving this bullish order block. What makes this a bullish order block? Well, this makes this a bullish order block because this was the last down close candle that then tapped into our higher time frame key level. Seeing this last down close candle tapping into this higher time frame key level, following that break of structure to the upside, I can be confident in this being a high probability order block and take my trade as we enter the order block opening. Stop loss just below the low of that order block because price should not want to retrace back down into this order block low. Instead, it should retrace into this order block, find support to then reach up higher and higher prices. And we can see here, I'm going to be aiming for a 4-to-1 R just above these highs. And let's see how this then plays out. Price taps into that order block level, comes near our low, but like we said, price should not want to take out this low because this is a high probability order block. And then we immediately leave it, reaching all the way up into our take profit for that 4-to-1 R. Very, very solid. This is also the exact trade that I took live with my private mentorship students that netted me a little over $2,700, where we ended up selling at the high of day for over a 4-to-1 R on this trade idea. Let's get into our next example. Now coming into our next example, we're looking at Euro USD, and we can clearly identify this New York power of 3, where we had this Asia accumulation. We had this push to the upside here during the London session into this rejection block, Price failed to get above that rejection block following this break of structure to the downside. So now coming into the New York session, we'll anticipate a retracement into this 1 hour bearish fair value gap, as this is my higher time frame key level for that retracement to the downside below this low and even down into this 1 hour order block level. Let's go down to the lower time frames and anticipate that retracement for that continuation to the downside. Coming down to the 15-minute time frame here, I want to put my limit order as soon as we tap into this 1 hour bearish fair value gap. Put my stop loss just above that 1 hour bearish fair value gap, as well as above this breakaway gap, targeting back below this low for a 4 to 1 R. Now let's see what happens. Price gives us that retracement we're looking for, back up into that 1 hour bearish fair value gap. And just like that, back below this low, TP hit for a 4 to 1 R. Let's see if it can get down here into this hourly order block. And it does so very, very nicely. So that's gonna be it for a video. I hope you guys got a lot of value out of this video. Make sure you guys hit that like, subscribe, and comment what you guys want to see next. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well, at Arkhamtrades. Thank you for watching.